Hi, I'm here with Cole Corcoran, and we're discussing today salary or dividends to pay business owners on Spurrell CPA. So, Cole, you've been your new hire here, so talk to us about your journey to the firm.
Well, it's been a long one.
Yeah.
Applied at quite a few firms, but finally found one that was just right for me.
Yeah.
Really enjoying it here. Everyone here is great. Get along well with everyone. Learning a ton. Lot of new programs to learn.
Yeah. And where did you graduate from?
From Grant MacEwan.
Grant MacEwan, so your 4-year degree there.
Yeah.
And we just found out today that Cole's a Calgary Flames fan, so
yeah.
we're a little bit unsure if we're going to keep him actually. But
I should have waited a couple months to let that one out of the bag.
yeah. So, what questions do you think it's important for business owners to ask Cole when deciding whether to pay dividends or salary to the owners?
First off, why do owners have to declare salary or dividends?
So ultimately, when money's taken out of the corporation, it's got to be taken out in one or two ways. It's got to be taken out at either a salary or dividends. Now, it'd be nice to be able to take out money tax-free forever, but unfortunately, that's not allowed. Eventually, we have to declare salary or dividends to cover the draws that the owners take out of the corporation.
What's the difference between the two?
So, I mean, the main difference between the two is salary is deductible from income, whereas dividends are not deductible from income. They're a direct withdrawal of the profit, so they won't show up on the income statements.
When people claim that the salary, dividend, and corporate tax rates are integrated, is that correct?
So what they're referring to, theoretically as the dividends aren't deductible from income when you have to pay corporate and personal tax on it. So what they're referring to is theoretically the tax rates, when you add up the corporate tax rate and the personal tax rate on dividend, should roughly approximate the tax rate on the salary. But in practice, there's so many variables that go into that the integration, although theoretically the purpose, it doesn't actually work out that way.
Okay. Should owners pay themselves with salary or dividends?
So the salary the decision whether to do salary or dividends is a really important decision. It's probably one of the most common questions we get asked from business owners. And I always tell people, if anyone answers you that question right away, they don't know enough about the subject. In order to really determine if you should do salary or dividends, there's kind of a deep dive that has to be done into the owner's circumstances and the circumstances of the business.
Okay. How significant can an inefficient payment strategy to the owner or their family be to a small business owner?
It can be extremely significant. It's not unusual for someone to come into our office and for us to find out that an inefficient payment strategy to the owners is, costing them 2 to 3 times what it costs for accounting services. Sometimes it's, business owners start out with trying to minimize fees and they think they hire the cheapest person and they end up paying 2 or 3 times what it would cost to pay a good person in extra tax. So,
are there some warning signs that the payment strategy to the owner is not being done correctly?
Yeah, one of the most common ones is if you pick up a set of financial statements or a business owner's tax return, if you see them getting paid on 100% with salary or 100% with dividends, so they have all of one or all of the other, a lot of times that's a warning sign that not enough thought has gone into it. Most efficient payment plans have a combination of both salary and dividends. Not necessarily that it's not the most inefficient, but that's one of those 9 times out of 10 when you pick it up, if it's all one or all the other, it's probably not the most efficient strategy.
Okay. How does other income not related to the business affect the decision to pay salary or dividends?
Well, I mean, there can be, the ability to split income between owners and their family members. So one owner might have income that's not related to the business, the other owner, may not. So, we have to determine, not just if it's salary or dividends, but who that salary dividends is going to within the family. Also there's things like CPP implications that can happen. So if you're paying out salary, you do have to pay CPP, and you can recover the employee portion of CPP when you file your personal taxes. But if you've extirpated the employer portion of CPP, that amount just kind of goes up into CRA Never Land and never really comes back to you. So you can kind of burn a couple $1,000s pretty quickly with things like that.
Okay. How can childcare expenses affect the decision to use salary or dividends?
Yeah, there's some expenses like childcare. They're only deductible from earned income. So although dividends, for a particular business owner might be preferring to declare dividends, once you consider the childcare implications, you can only deduct the childcare from salary.
Okay.
So otherwise, you have to make that determination. That might be one of the factors that would override a decision to pay dividends.
Okay. How can divorce affect the decision to pay salary or dividends?
This can be a tricky one. Sometimes, there can be separation agreements that are based on line 150, and line 150 will be higher with dividends, even though the net tax to the net payment to the shareholder would be the same. Also, in terms of litigation, sometimes a dividend strategy could be a little bit more difficult to, kind of portray to in a litigation strategy. So sometimes a simplistic salary strategy is a little easier for when parties are litigating. So those circumstances can affect the decision for salary or dividends, and they're both, quantitative and qualitative.
Okay. Can a family member's corporation or the corporation of a business partner affect your decision to pay salary or dividends?
Yeah, you can have, sometimes the family member's corporation will be associated for a small business. So in terms of accessing the 12% small business preferential tax rate, sometimes family members' corporations are sharing the limit to that small business tax rate. So, and if that's the case, if we're at risk of going over that the small business threshold of 500,000, we might want to declare salary to get us back down under, and it's not just 500,000 in one business. Sometimes it can be we have to total up the income from all the corporations in the family if they're associated.
How can moving expenses affect the decision to pay salary or dividends?
Moving expenses they're similar to the childcare issue, where you have to have salary in order to deduct those moving expenses. So again, if otherwise dividends would be better, but you have moving expenses, sometimes that shifts the pendulum back to salary because you need salary in the new location to deduct the moving expenses.
Okay. How can past or future losses in the business affect the decision?
Yeah, this can be one where we talked about the integration, where when you're paying dividends, theoretically there's a corporate tax component and a personal tax component because you can't deduct the dividends from corporate income. But if there's going to be a loss in the corporation, sometimes there is no corporate tax component. So understanding what those losses were, currently ongoing, possibly in the past, that we can utilize moving forward, that'll affect our decision to pay salary dividends, because sometimes we can, if we have the loss, we can just pay the personal tax and avoid the corporate tax.
Okay. Can contracts with customers and suppliers affect your decisions to pay salary or dividends?
Yeah, you can have in corporations what we call personal service business risk. And what that is essentially a punitive tax that'll be assessed to business owners who are really deemed to be an incorporated employee. So when we have more personal service business risk, and personal service business risk is not absolute. It's kind of a pendulum where you either have low risk or high risk. There's no real definitive test. But if you have a high risk for personal service business risk, or even a moderate risk, we start preferring salary income, because even if they do assess the higher corporate rate on the personal service business risk, if it's been paid out at salary, it's a higher rate of something that's been netted off with salary already. So.
Okay. How long would it take to teach someone about all the issues that could potentially affect the decision to use salary dividends?
Really it would take a 4-year undergrad degree and 3 years of articling, to get to the point where you're a basic level of proficiency. So it is one of those areas where although business owners would love if there was a one size fits all and you could learn it in a weekend course, it's just not really practical. And the significance of the decision, can be, $5, $10, $15, $20,000 easily. So it's something that it's really best left to a professional, and that's the best way to go about it. Right? There's no quick fix or one size fits all solution.
How does your firm analyze all the variables required to issue tax-efficient strategies?
So, that's what we do differently here is we have a formalized process. In other firms, sometimes they have the expertise to do it, but they don't have a formalized process. I tell guys like you, when you're going through the CPA program, you're going to get tests, and they have case studies in the tests, and you're going to get a 5-page memo with everything you need to know about the client. In real life, that never happens. The client never comes in with 5 well-written pages of everything you need to know to make the decision. So we have a formalized process on what information needs to be gathered at what time and how we analyze those numbers. So make sure that the client is not it's not the client's responsibility to tell us the right information. It's kind of more our responsibility that we have to have a process in place to get the right information. And then we have over the last 7-8 years that we've been in existence, we've been perfecting and improving upon our process to run the numbers and analyze which alternative is better. So A, we can get the numbers more reliably, and then B, we can process them efficiently too, so the client they can get an efficient tax plan really without spending exorbitant costs to try to have people by the hour to do that. So yeah, so that's what we have here today. We'd really appreciate any comments that you have, and we look forward to hearing from you and doing another episode. Okay, thanks very much.
Thanks.